Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, and it's Wednesday, October 14th. Hope you guys are having a great day today. As you may know, we have kind of a short week in the markets this week, and this week also is kind of relatively light. Not as light as last week, but we still got data to report, but not as many as we would normally indicate here. Today we pretty much just have the producer price index. This is the inflation. We gauge inflation on the wholesale side of things. So it doesn't hold as much weight as your CPI or personal consumption expenditure, primarily because that's what affects consumers. And even though costs sometimes rise on the consumer side, it doesn't always get passed on to the consumer. So this is why it doesn't hold as much weight. But we do keep an eye on it. So we'll start off with month over month for the headline number producer price index. So this is for the month of September. So in August, we had a 0.3% month over month increase in the producer price index. Forecast was calling for 0.2, and it jumped up to 0.4. So it came in a little bit higher than we expected. Now we're going to do the month over month when you do the core, and core is when you strip out the food and energy, which are two variables that we cannot control. And this is kind of provides the baseline that we look at primarily for our inflation data. So we look really at more at the core than we do the headline news. And again, like it's not again, but at 0.4% back in August, forecast like its counterpart was at 0.2%, and like its counterpart, it went up 0.4%. So it's year over year. We didn't get the year over year for the headline number, but year over year for the core went from 0.6% in month of August. Forecast kind of for a 0.9% increase, and it basically doubled to 1.2%. So the markets are watching that. So surprisingly, we're not getting more impact, which we'll see that shortly. But again, we did have that kind of a jump like that on the consumer side earlier, about a month or two ago. So maybe that's why it's not as impacting. Plus, this isn't as much impact as the other consumer reports or inflation data. Let's jump over headline news. Stocks are up. After yesterday, when we did the report, stocks were up when I was starting it. However, the Dow and S&P kind of fell into red territory and ended up closing in negative territory. And whereas this technology kind of what boosted NASDAQ up due to Amazon as well as Apple kind of pushing those up there with their special events yesterday. We got more Q3 corporate earnings reports. We got more banks releasing and financial institutions releasing their corporate earnings reports. A lot of them are coming in with a little better than expectations, which is good news for the economy, showing that especially on the financial side, things are still relatively healthy. Coronavirus topic came back into focus after we announced yesterday Johnson & Johnson, but now also Eli Lilly put a temporary halt on their trials right now as some issues arose, and they need to kind of correct those issues. So these are sometimes common in terms of trial periods, as something may come in and they have to kind of take a step backwards to try to figure out how to rectify any issues that may arise. So in this situation, it came back in, and of course, as we see some numbers, we're heading into the fall-winter period. People are concerned that this may have a second wave type of thing. So again, this is something that's on investors' minds. Lastly, but we have several Fed speakers, Fed members who are speaking today. Sometimes, depending on what's said, it could kind of move the markets, depending on if it goes off what way investors were thinking or realize what was going on or thoughts that are coming out there. So they'll take a look at Fed speakers. They could have a potential impact on the market at some point today as well. Let's see what this is doing on the mortgage-backed securities, what mortgage rates are doing today. Right now we're up 3 points. We were way up here. We're up like 18 and closing up 10 basis points. So we did pull back a bit. Right now we're at 0.3%. So right now it's simply state where about the pricing should be relatively similar to what we saw yesterday. Even though we did pull back, it was only 8 basis points. However, with the 3 basis points upwards, we should be, and you get this start effect. So this is kind of something that shows some uncertainty. So this is something in the market we'll have to kind of keep our eye on, watch, see how this progresses through the day. However, this right now pricing for mortgage rates should be similar to what we saw yesterday. And then let's take a look here at the yields. Yields are still dropping down. It stopped at that next technical level as we had mentioned. Remember, we broke down below this technical level. Now we broke down below this one, and now we're working our way down to the was a 50-day moving average right here. And right now we're down just under 0.72, whereas yesterday we were right about 0.73, 0.74. We were kind of between that range yesterday. So yields are kind of dropping a little bit as we speak, which is putting less pressure on mortgage-backed securities and mortgage rates. So good news there. All right. So again, mortgage rates should be relatively unchanged from yesterday's pricing. And if you guys are looking to refinance or purchase, stay tuned. I will leave a link to a website you can go and also put in the description. You can go if you want more information on different loan programs, any questions you might have on it. And if you don't find it on the website, please feel free to reach out. We'd be happy to answer any questions you might have. We can also assist you, as I'm a loan officer and the company I'm with is a national lender. We can simply help you with your purchase deals if you're looking to if you need to get pre-approved, so you can submit your offers and finance those deals, as well as refinance. Refinance can be a couple different ways with regards to if you need to take money out of the equity of your property and do lots of different things. We can talk about that later. Rate and term, or if you want to go from 30-year to 15-year fix of some sort, or if you got some situations where you are trying to plan for college, got kids who want to plan for college, or if you got financial planning in the sense that you want to go ahead and look for that financial freedom, like retire and stuff like that, we can talk a little bit about some different strategies we can work with you on. All right, you guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.